What is up guys, my name is Ignas, welcome back to the channel. This week we made a dividend comparison on 3 large names from the aerospace and defense industry, and there Lockheed Martin had a slight lead over the other two. I don't yet have it in my portfolio, so today we'll be taking a deeper look into it, to then decide if it's worth starting a new position right now, or otherwise wait for a better opportunity going further. This year LMT is doing awesome, the stock is up for 36.83% on the year to date, and then if we zoom out to 5 years, it is even higher than that, plus 56.41%. Though with the price surging higher recently, price to earnings ratio is now at 22.26, and the dividend yield has been moving lower recently, now at 2.47%. So the last time we looked into the stock I've made some notes. We've seen several positive but also several negative aspects, so today we'll be going through those again to check if they improved or if they have actually gotten worse over time. An early thumbs up would be very much appreciated, and with that out of the way, let's start. The first metric we are taking a look into is revenue, and this is here Lockheed Martin's history of the last 5 years. The last time we checked, revenue has been continuously moving up, and we didn't see even one quarter down year over year. Unfortunately now that is a bit different. So this year we already have 2 quarters down. In March revenue came in at just under $15 billion, minus almost 8% for the quarter year over year. And then in June we had it at $15.4 billion, lower 9.3% year over year. So the strength we have seen for the past 5 years, unfortunately is slowing down in 2022, at all not what we have seen with the price action recently. Now let's take the price to earnings ratio. So the last time we looked into it, the ratio was climbing higher, closer to 20, though it was trading closer to 15 in the 3 previous years. But with the stock price surging up recently, the PE ratio went over 20 and it is now at 22.26. So if we consider that 19 point something is high, then unfortunately now the PE ratio is even higher than that. Now the next metric is the number of shares outstanding. And to my surprise, I believe that we do have an improvement here. So back in 2017, the number of shares out was at 290 million, and now the most recent quarter in, we can find that that number has consistently been going lower, and even accelerated downwards this year. So we are now looking at a number of shares out with 265 million. This means that in 5 years, Lockheed Martin bought back around 25 million shares, which at the current price of around $408 per share would be a stock buyback of over $12 billion. And that would be a decent reduction. Unfortunately, I have checked my notes, and previously we have found a 5-year buyback of 26 million shares. So all in all, it so happens that that reduction is slowing down a bit. Now we have already looked into Lockheed Martin's dividend metrics with this week's dividend stock comparison. I will leave a link for it in the description below. But I still want to bring one metric up, and that is the current dividend yield compared to its 5-year average. So we are in my dividend stock watchlist. Here is Lockheed Martin's dividend yield history of the last 5 years, and on average the stock was trading at a dividend yield of 2.55%. So the worst yield was in the beginning of 2018, with a dividend of 2.15%, under the 5-year average for 15.62%. And then the best one was in the end of 2021 with 3.14%, over average for 23.23%. But if we would be buying into the stock right now at a dividend yield of 2.47%, that is a bit under the 5-year average for 3.06%. So it looks to be a decent but not the best opportunity of the last 5 years. If you by any chance would be interested in doing a similar analysis on another dividend paying stock yourself, you are able to access this watchlist by following the second link at the top of the description. Otherwise, feel free to add a ticker symbol in a comment below, and I'll consider adding that into the watchlist myself. Maybe you could share some interesting opportunity available in the market that I'm still missing. Now that we have checked into the history, let's take a look into expectations. At what price analysts think the stock will be trading next year? Here we have information on 20 price targets from analysts. They range from the lows of $361 to the highs of $515 per share. On average, the price target comes in at $456.35, and currently the stock is trading at $484.87. This means that analysts expect that for next year, Lockheed Martin should be trading lower for 5.9%. Now let's take another angle. Here we have Lockheed Martin's earnings per share estimates for next year from 19 analysts. And on average, they are predicting that the company will be bringing $27.12 per share in earnings next year. If we assume that the P/E ratio remains the same, then we are looking into a potential increase in the share price of 25.1%. Now let us take Superinvestors. Currently, Lockheed Martin is in 4 portfolios. 1 have reduced on their position, but 2 funds added into it. So Yachtman Asset Management sold 0.34% of their position, and they are now holding just under 357,000 shares, taking 1.59% of their portfolio. But then we have Torrey funds. They added 0.58% into their position, and are now holding 5.7 thousand shares, taking up 0.47% of their portfolio. And then another addition was from Markel Asset Management. They added 4.82% into their position, and are now holding 10,800 shares, with the position taking up 0.7% of their portfolio. So the largest holder, Yachtman Asset Management, is unfortunately reducing on their position, but that is a small reduction of 0.34%, and then with 2 funds adding into it, I will conclude that overall Superinvestors are bullish on the stock. Now if we take insiders, they have both been buying and selling. In the last 6 months they made 3 long transactions, adding up to $501,000, but then also sold 3 times, totaling to almost $3 million. So overall we could say that insiders have been selling more than buying, but on the other hand the stock price has been surging up recently, and we are pretty much right there at the 52-week highs, where I don't see a problem in taking at least some profits off the table. Lastly, we have the price chart. The last time it surged up quickly was in March of this year, with the stock reaching the highs of $480 per share. Then we saw several months of consolidation, and in June the stock started sliding lower. There was a bit of a bounce in July, where the 50-day moving average went under the 100, but the stock dropped afterwards, in the middle of July reaching the 200-day moving average, and then in a few trading days dropping to the 300, with a loss of $373 per share. That worked as a decent support, as the stock bounced back higher. In August we headed back to the 100-day moving average, but then turned lower again. By the end of September we had it at the 300-day moving average again, and then a head and shoulders pattern, with the stock bouncing off the support of the 300-day moving average in the middle of October. Afterwards, in the last 2 weeks, we pretty much only saw green days. We now have the relative strength index way overbought at 76, and there is not much slowdown in the lines of the MACD. So I would be waiting for the bullishness to calm down, for the relative strength index to go lower closer to 50, and maybe we can find the price dropping to that support of the 300-day moving average, which is now at around $400 per share. So we went through the metrics I wanted to go through, and now let's make a quick recap of what we found. Revenue has been consistently moving higher up to 2022, but unfortunately 2 out of the last 4 quarters, we have seen decreases year over year. If we consider that Lockheed Martin's fair value is a price to earnings of around 15, then with the PE going over 20, is unfortunately not something we are interested in. Now in the last 5 years they bought back around 25 million shares, which is a slowdown of what we saw half a year ago. Now the stock is trading at a dividend yield close to its 5-year average, but that is still under it for 3.06%. Though analysts seem to be increasingly bullish, as they expect that in 1 year the stock should be moving in the range from -6 to +25%. Overall, Superinvestors seem to be bullish on LMT, and though insiders are trimming out of their holdings, that could be explained. The stock has been recently surging up to its 52-week highs. Now with that same surge, technicals are not great, relative strength index is over 70, and there is a huge gap between the lines of the MACD, so I would want to wait for a slowdown before starting a position, maybe waiting for the stock to come closer to the support of around $400 per share. So that was it. Lockheed Martin is not yet in my portfolio, but it is in my watch list. I have an idea on what needs to change before I start a position, and also what my price target for it is. Now what is your stance? Are you holding Lockheed Martin in your portfolio? Share your success story with it in a comment below. Also, don't forget to support the channel and leave a thumbs up under the video. Last week I've looked into several other companies, so if you are interested in any of these, then click on a video that is currently on the screen. And that was it from my side. Thank you for watching, and I will be seeing y'all in the next one.